Before we speak about this new paradigm in payments, acceptance, and orchestration, first, what we have to understand that nowadays the payment, it's not only about just enabling transaction. At the end, all what we will be talking about is a just simple transaction, payment. From the beginning of the banking industry, let's say in the history, nothing changed. The financial institutions offer loans, deposits, and payments. But everything changed dramatically. Now we have cards, QR code payments, account-to-account payments called before pay P2P. Now I see it's more used A2A. Wallet payments. And to that, we have to involve the compliance, the settlement, the authentication, the customer experience, which is extremely important. I'm super happy to see here many startups who works on a customer experience, especially that, like, as we will be talking about orchestration, we have so many payment rails, so many solutions that sometimes from the user perspective, is it a SME or is it a corporate or is it a retail consumer, sometimes it's difficult to choose the rail of payment because you see on your screen so many of them and then you are coming, we will be talking. So let's spend this 30 minutes of talking about what is current, but also what is future. And maybe to understand more about the future, as during the previous panel, we spoke about the digital euro, which is something which maybe will give us our sovereignty from the huge players on the other side of the ocean. Mariusz, let's start with that. Just in simple terms, where we are right now with digital euro, where we are now.
In basic, not to overlap with the previous panel, retail digital euro is the equivalent of cash. It's not here to replace, but to complement day-to-day payments. I said retail because the wholesale digital euro is another topic, and maybe I'll mention that a bit later. We're past the ideation, the consultancy, the public consultancy phase. We have now entered the development phase, the software development of digital euro. It started late 2025. Currently, the teams involved here and the companies are EU only and covering capabilities like digital app and SDK, alias lookup, offline capabilities, secure exchange payments, fraud and risk. Along the teams that are currently engaged into the development, there are also teams from 4 national central banks, Italy, Spain, France, and Germany. And I would roughly estimate hundreds of people working to a common goal. I said EU only because also from a technology perspective, and you mentioned that independency of from other parts of the world, including the technology providers are from EU, the cloud solution is from a company in France, and the security is offered by a company in Germany, Munich. So the direction is very clear. It's not just ECB that is doing this. We've partnered and we have customers from other authorities in Europe that are currently engaging in a strategic decision to go either sovereign or US public cloud or a mix. And that states the obvious that we're investing publicly and privately towards this type of independence. Now, Trement is part of the implementation teams, and we're the only country from Central Eastern Europe, from Romania more specifically. This, of course, comes with a lot of responsibility and pride, but we're also the only team, the only company that have won 2 of the tenders of those capabilities I was discussing, the alias lookup and the development of the digital app and SDK. Now, fast forward to to nowadays, the whole program, the whole development is aligned with the digital euro pilot that was announced earlier this year.
Yes.
There was a registration period that ended up in May, and currently ECB is evaluating the 50 PSPs and banks that have registered, tier 1 banks from all across Europe. And from July, the development phase will start. The deadline for that beta digital euro, as it is called, is second semester of 2027, meaning that we have pretty much 1 year until the first issuance of a digital euro. Those PSPs will be in collaboration with the pre-validated set of merchants, and the end user will be Eurosystem employees, an estimated of 5,000 to 10,000 employees that will evaluate, that will use and give feedback on the usage and the adoption of digital euro starting next year. The scope of that particular digital euro is shifted equally between distributing and acquirer. More specifically, it will cover P2P payments via alias or DIN, which is the digital euro account number.
Or like, it's like a peer-to-peer.
Payment to payment, yes.
Or payment
person to person, type of situation. And of course, there will be a payment to person-to-person, transaction via NFC in an offline environment, because also Agata mentioned the offline capability earlier. Regarding acquirer, there will be two scenarios. P2B, so payment to business, person to business, in what respect, contains soft POS capability, and the P2B using e-com or m-com platforms. So the work that we're now delivering is aligned with this target that's pretty much stable. Of course, there's a large assumption that this year the legislation will be also made available.
Okay, so, but this is everything about the future, and everything is not final. It's still under, let's say, construction. So why should banks and PSPs care about it now, before everything is done? Especially we have so many banks representatives and PSPs here in the audience.
Yes. You mentioned cards, account to account, open banking, so payment rails that are already available. Digital euro will come with its own payment rail. It would be a mistake to say that banks and PSP will just connect to that payment rail and everything it's simple, because behind the scenes the impact is much more significant. It touches onboarding, offboarding, it touches the way access management is done, life cycle management. You have a commercial bank account linkage toward that DIN digital euro account number. You will have impact on liquidity management on bank side. You'll have impact on compliance, on how a payment is done, what happens when a payment fails, what's the error handling, the retry mechanisms, what is the settlement behind that specific rail payment. And of course, there's the operation side. Who offers support? What type of support do the end users would need? And what's the bank's channel strategy? Because ECB will offer the app, but you also can, as a bank, you can also use your own wallet, but then you need to integrate those online and offline SDKs that will be provided by ECB. So the effort behind is quite big.
Yeah.
I would recommend a discovery, an initial assessment. Already now of what is required, what's the impact on the process and systems, core banking, CRMs, mobile apps, treasury systems, and see what is reusable, what needs to be enhanced, and what needs to be created. I gave you the soft POS example.
Yes.
That needs to be enhanced, or definitely. So it's much more than just plug and play.
Understand. But as I mentioned before, it's more and more and more complex. Now adding a new thing, digital euro. So, Alexandru, from the perspective of a bank, adding more payment rails creates real complexity. For example, for merchants. We have a lot of merchants here also for the audience, so maybe it's important for them. So how can we better support a merchant who has to manage several systems at the same time, integrated with their bank, payment, ERP, reporting, accountancy, how to manage everything from your perspective, and now adding digital euro.
Yes, the word would be complexity because we build our whole construction is built for the acquiring parts in many years. The whole setup is very complex. Yes, the merchant requirements are always very simple. They want 2 to 3 seconds payments. They want full reporting. They want to integrate with all of their system. This is their main goal. We always been a company that helped our merchants. We are customer centric, and we always started to build our use cases for what they really need. And but each rail that we build brings really more complex layers, and from our point of view, it's also, if I may call them, redundancy points. Because yes, on paper or on your Figma, as always you are using, it looks very simple, but in real time, I know from my own experience for large scale operations, it's not that simple. It's always to obtain that operational excellence that we're always talking about. Each new rail brings more and more complex operations.
Yes, but these operations are you manage it, so the merchant don't have to take care about it.
Yes, but our main point is offer that operational excellence from the merchant point of view, so they can expand their business and to help their business, rather than adding new rails that won't scale enough. This is also a problem, and this will trigger also a lower adoption rate. But as I said, we are operating in very good ecosystem. We built that ecosystem also on issuing and acquiring part.
Yes.
We indeed have the largest footprint in this delivery and in acquiring part. But also it must be made with great responsibility, so the system will keep running.
Understand. This is very important perspective from the bank. Raluca, the perspective of the orchestrator. This is also important. So let's stay with this merchants and the complexity. So merchants now have the access to more and more payment rails. A new one is coming. So how should a payment orchestrator decide which rail to prioritize? What are the most important at the point of sale?
Actually, I think we are seeing a transformation from this point of view, because I don't think the merchant should decide which payment rail actually to use or to prioritize. I think right now what we are seeing is that we are transforming. We are seeing, or actually we are trying to move more and more to a dynamic decision, considering actually the customer habit, the customer needs, the business model or the business objective of the merchant indeed, or other kind of elements like, I don't know, a characteristic of the payments, the risk of the transaction and so on. And the decision at the end of the day should be made at the platform level, so not by the merchant.
So what should be a goal to lower the risk, to lower the costs, the user experience?
Cost was always an element to discuss, but it's only one point from all the elements that we have to consider when we are discussing about, what a merchant needs, what is the added value there. For example, we can have, let's say, a payment method or a payment rail that is cheaper at the end, at least less cheaper for the merchant. But if we are losing in terms of conversion, at the end of the day, it can be overall more expensive for the merchant. So I think our our challenge at the end is actually to be able to bring the balance between all these elements in order to be able to balance between the risk, fraud, between the settlement speed, between the cost, between the customer expectation, customer experience. This is the focus and this is the challenge.
Very interesting perspective. And the orchestration is a challenge. The broad choice is a challenge. Even for me, I'm in finance for almost 20 years. And even now, when I'm as a customer in some merchant, in some shop, it's sometimes shocking how many, the choice of this and this. I live in Berlin, so we have the buy now, pay later from so many providers. It's a little bit crazy. And talking about this, and maybe going a little bit back to the past, I like to ask Mircea, as we spoke before the conference, you have the huge experience, as you mentioned. How you see this transformation from the simple options which were at the beginning of the digital payments? I see among the crowd are mostly here young people, but at the beginning was nothing, just payments, then were cards, and then everything started. Thanks to many regulations, of course, thanks to PSD2, which opens the open banking and so on. How you see this change from the simple card payments which we had at the beginning to now the complexity, I will call it the era of complexity, and what will be in the future, maybe only digital euro and everything else will disappear.
So, from my experience, banking used to be a very, very boring business. Nobody really wanted to change anything. In the long history of hundreds of years of banking, you had to do it as the bank wanted or no. Now what's good is that things are changing, and fortunately or unfortunately, the banks have to adjust as well. They are no longer in the position to say you do it my way or no way. All these new things which are happening with fintechs, with technology, are somehow forcing the banks to adjust and change. That's the good part. And now banking is no longer a boring business, because you have to get with you smart guys, inventive people, creative people, or use external resources which are as inventive as well. Again, banking needs to remember that they are doing business for the customers. So sometimes in the past, customer had to adapt to the banking ideas and rules and so on. Now, banks should adapt. The ones which are not adapting would somehow disappear on a long-term basis. So, these new rules are a good engine for the banks to reinvent themselves. And they should remember they are working for the customers, and they should find the best solutions as per the customer needs. Okay, banking, it's about trust. Everybody should have this comfort that whatever they are doing with their money, they are doing in a safe manner. Money are not lost. Frauds are limited. Hard to be excluded, but at least limited. But still, banks have to adjust to the new way of doing business. 30 years ago, you were going to a bank, staying in a long queue just to take a statement to see how much money you collected, and then another long queue to make some payments. Now,
I think nobody remember that among these young people here.
I'm not sure, but it was, and actually this change in the long history of banking, it's quite recent. But talking now about the future, it's hard to know where at least this part of transactional banking is going. But things are moving fast, very fast. And again, bank should put customer first, not just a simple statement. Really, they have to adjust to the customer needs and offer the best products. Otherwise, they should take another business.
Thank you very much from this perspective. This is amazing. You mentioned two things. You mentioned trust was always important in payment, and probably I hope that during these next 2 days we'll talk about it, because having here the representatives of national banks who are some kind of guarantor of the trust, we have banks, we have payment providers, but as I saw there, and I'm happy to answer next questions, we have also here people from the crypto industry, where the trust is based on the technology, not based on the trust to the institutions, which is extremely interesting topic. And I think we'll also cover it maybe in the next panels. So from this past to the future, maybe let's jump a little bit. It's 2026, 2030 is ahead. It's just 4 years and it will be 2030. Amazing, amazing, really. Less than 4 years and it will be in the next decade. Marin, we spoke before the conference about this perspective for the next decades, and staying in this topic of the acceptance platforms, payment platforms, and orchestration. Building a payment acceptance platform from scratch, now or in few years in future, which capabilities and payments rails would be non-negotiable from the day one? What such a futuristic platform should have? Of course, digital euro, but what else? What is not needed anymore, maybe?
Thank you, Michal. Thank you for the question. So, my colleagues here addressed, the complexity of managing a lot of payment rails is becoming a burden onto payment platforms. So one of the main issues which I would invest, and it would be a decisioning engine which would handle various payment rails and can keep up to all the requirements of the payment rails. The second important thing would be authentication, which is it's a complex process, which usually adds a layer of complexity to the customers. In the end, it affects the drop-off rates of payments very strong, because the customers drop off at different levels of authentication. The third thing would be reconciliation and reporting. Merchants usually don't want reports from different payment rails standalone. They would like to see one unified report, independent of which payment rail was used. Also, fraud is non-negotiable. And one thing which I would add to a payment platform would be data. I'm from open banking, so that's why data is interesting for us. Data would add a layer of intelligence, which is actually would help better understand your customers, better understand their behavior, their profiles. You can even target the preferred payment rails through it if you understand your customers. You can also increase your loyalty programs. You could also add some BNPL intelligence layer. You can see and understand if has a fraudulent past and stuff like that. So in the end, a future payment platform would be not more about choosing what payment rail is available in that time, because there'll be tens and tens of payment rails, but more about which payment rail better suits the use case and provide it to the customer. Because merchants don't really need to understand and know what payment rail was used. They want to see the money in their account, they want to see them fast, and they want to see them without high costs. Customers, they want to see a good experience, a seamless experience. So this is my opinion. Thank you.
Or maybe there will be no money. Maybe there will be some another value which will pay. There is a very shocking and extremely interesting movie where the time is a currency.
It's also a payment rail.
True, it's a payment rail. Very difficult movie. Let's go a little bit back to the future. Marius, one more time touching this digital euro from the perspective of PSPs and the banks and the merchants. Just to, in few words, what is this essential more value than cost? What is their cost? This is the same like with the cryptocurrency. There was also the main goal at the beginning was, okay, let's do something which is not managed by central banks and the establishment, very funny word, and then be independent, but plus the costs, lower the costs. What is here?
I'm not sure that I will manage in a few words, as you asked, but okay, it's clear enough that we were talking about multi-payment rails. There will be future ones that will join the party, let's call it. I don't see any payment rail that will replace all of them. So the complexity is there. You mentioned orchestration. Just wanted to highlight a bit that I think orchestration is actually the answer to how can I hide that complexity towards merchants and consumers and the end users. Because I personally am not interested when I do a payment, anything else than is it fast, is it trusted, is it easy to use, and the merchant has a focus on how fast can I have my cash flow available. Does it generate any complexity in the operation side? So from this perspective, regardless of the platforms, connectivity will actually embed all those rules, all those business rules, those settlement, the fraud risk engine. So everything will be there connected. Either if it's we're talking about a centralized solution, and this is how digital euro, the retail one would be, or if we're talking about the wholesale digital euro, which from the direction that is going, it will be on a DLT platform connecting traditional payment with DLT platforms from the market. Now, coming back more to the cost option, I would link also to the answer that Raluca gave earlier. It's not about the price. So a low cost doesn't mean a win. Beside that cost, you have to look into conversion. She mentioned that. That's clear.
This is crucial. From the merchant perspective, it's absolutely crucial.
How likely or less likely is for the customer to engage and come back if a payment flow if it provides hesitation. Then we're talking about customer experience. But does it feel safe? Does it feel familiar? Yeah. Does it generate the comfort when I choose that payment? Third would be, like I mentioned, settlement and cash flow. I need to know when that money, that is final money for the merchant, where can I reuse it? And that's also links with reconciliation. The banks and the merchants need to reconcile very smoothly. And regarding to digital euro, that settlement would be instant. So it comes with some advantages.
Yeah. Thank you, because we have a small delay, but delay was that was because Professor Belka was speaking a little bit longer, which I'm of course very happy because I was his student 20 years ago, and it's worth when he's speaking more. It's worth it. But let's staying in this context of digital euro. Is Bank Transylvania prepared for that? Are you somehow working in this working groups, or are you somehow prepared?
We are always being prepared for what's coming up next. As I told you, we are using many rails. We are always building new rails, and acquiring part is done. The mainstream that let's say the main goal of building up this rails. For us, it's not, as you said, it's not a new paradigm of what type of payments are coming. For us, it's business as usual for creating these rails and to adjust them to what we have previously built in terms of the merchant partnerships.
Yes.
What we are servicing, and we are always preparing very responsibly the whole setup, the whole infrastructure, because in deep down it's a matter of logistics and infrastructures, and it's very important to be prepared for this.
Thank you for that. The last question, very short. I will ask each of you. Only Marius, his answer is so obvious that I will not ask him. If you could keep only 2 payment rails in Europe by 2030, only 2 by 2030, which would they be? Let's start, Reluca.
Actually, I was thinking that in 2005, Romania started the electronic payments process, clearing process. So 21 years ago, we started that process, and right now we are discussing about so many different payment methods and how we are going to integrate that not only in the customer life but also in the merchant life, how we are going to prioritize them, how we are going to monetize them at the end of the day. And right now, in this complex context, I was thinking that our goal in Ethiopia is actually to be able to integrate as many of them, and without the merchant to feel that like he is
you're somewhere in the back.
Yeah, and right now you are asking to choose only 2. I don't know. I have 15 years in the central bank, so I will go for a public infrastructure. I will choose digital euro. This is, of course. And then a private one. I think I will stay for the moment with the cards.
Cards, thank you. Marin?
Here I can add a wonderful question. I don't know how you come up with these questions, but the public infrastructure is one of the layers which definitely worth mentioning. The cards, I would mention that the global coverage. So it would be a payment rail which I would definitely keep. But also I would add the third one, which would be account to account and pay by bank.
Yeah.
Cost, speed, and if it's the customer journey is done well, then it's also seamless for the customer.
True.
So I would keep 3. Sorry, crypto guys, but
no, I understand. Mirza?
I'm a bit old-fashioned, so I would go on public infrastructure and cards.
Thank you.
Coming back to the trust issue.
Yeah, Visa and Master and Amex are happy. And the last answer, Alexandru. 2. What will stay in 2030?
I don't think we need only 2. From my perspective, as the main acquirer in Romania, we can accept everything. So we are prepared to dematerialize the terminal. What I'm trying to say, at each point, the terminal must be there. We are there for it. So if we can dematerialize also cash and put it into a post terminal, we can do that also. It's not a problem.
Yeah. Thank you very much. And finger crossed, of course, for a digital euro. Thank you very much.